Hey everybody, welcome back to Ryan Makes Sense. Today we are looking at a viewer requested stock slash company. If you have any stocks you would like me to review, go ahead and drop them in the comments. Let me know what you want to see. So this is ticker symbol PGY, Pagaya Technologies. I've never looked at this one before in depth. I may have charted it in the past, but let's go ahead and take a peek here. So looking at the daily chart, we can see it is in a downward channel, but also we have a gap to fill at $13.50, $14. And right now the stock is at 1067. Just going back and looking at the history of this stock, we have another gap at 70, 38 to $70. That's pretty crazy. So we have a gap at 14 and 30, well, 70. So 14 and 70. That's interesting. Let's look at the bigger picture here, see what we've got. So definitely looks like this may have been a SPAC stock. So the strength is at a 40, which is not bad, but we can see just looking at this chart, this huge red candle, big selling. That was 45 million shares sold. Momentum looks like it's on the uptrend just based off of this indicator. Money flow is on the down slope, and the relative momentum is also scraping the bottom, meaning there's not much demand for this stock at the moment. Just based off of this, it looks just kind of weak per se. I mean, it looks flat here, but let's have something better to look at for visual purposes. Okay. So went from 30 down to 10. All right, so high level, we can see, this shows me that's probably a SPAC. So there was 2.9 million shares available back in 2020, 2021. 2023, there's 62 million shares available. The sales are great. You want to see this type of move. It went from $91 million in sales in 2020 to now $770 million in 2023. Huge upswing. Earnings per share went from negative $44 to negative $5 to negative $2. I think we could see the EPS coming positive. The income, they are not profitable. They do have plenty of ample cash, not too much debt right here. Gross margins are at the high growth 30% plus. Again, not profitable. Earnings per share this year, which is 2023 was 121. 2024, they're saying 134 million. I'm sorry, 134%. Definitely low amount of shares available. Shares outstanding is 62 million for 2023. This is showing 49, so a little bit of a delay there. It looks like there was a stock sale. 7.5 million shares added to the flow. There was a reverse stock split. So why are they doing this? I don't know. Let's see what we can find here really quick. And this is going to take me to Wall Street Journal. So let's just see what we can. Lost their value, lost their trade. They issued $95 million of stock at a deep discount. Okay, well they're fighting high interest rates. Okay. So they offered 7.5 million shares at $12.70. It's already gone down. So the company intends to use the net proceeds from the offering of general corporate purposes to support future growth, which may include working capital expenses. Okay, so to pay off the high interest debt. So the offering is expected to close March 18th. Okay. It's a global technology making life-changing financial products and services. What are their life-changing? Now we have to look at that because that is just, are they just using fluff words here or what? AI lending network. Life-changing. Life-changing. We're not going to let that live down. Life-changing technology, whatever. Okay. Why? Okay, global company. A 1 for 12. So they did a reverse split and then they did an offering. Okay. So they had 605 million shares. Now they have 50.4. Okay. All right. So what are your guys' products, man? Come on. So they have headquarters in New York and Israel. A customer applies for a loan. Okay. So, okay. Basically, AI looks at so many data points. Okay. You don't need AI to do that. You really don't need AI to do that. But I mean, if a company is looking for some type of... Okay. This just clicked in my brain. If these companies that we just saw, like Ally Bank and all these other companies, let me just go back. Let me paint the picture. Let me paint this picture. Employees, yes, right here. Okay, our partners. If Visa, SoFi, Ally, Avant, if they are using Pagaya technology, any fault goes back to Pagaya. If a customer doesn't meet Visa's criteria, they bring on Pagaya, and Pagaya says, hey, this person, you show them as risky, but we look at all these data points and they actually fit your standard. Meaning these companies can allow riskier debts or riskier customers. And if they get audited and say, why do you have someone they didn't meet your criteria? They say, oh, Pagaya, they have this AI technology. It said they met this criteria. So interesting. It gives opportunity to more people. So I like Pagaya. I like how they're using AI to qualify people who weren't qualified technically first initially. So I could see Pagaya working with like Penny Mac, like mortgaging services. They probably already do. So, okay, that makes sense. They're saying life-changing technology, life-changing financial products. They mean they're qualifying people who may not have been qualifiable due to their debt to asset, debt to income ratio. So very interesting. So does Pagaya take on that debt? That is my question. Possibly. Data science. Possibly. So I don't think this company takes on the financial burden but they're not profitable. So we need to dig into that a little bit more. So at a high level, let's just do some super quick charting. And again, we're on the weekly. We're looking for, all right. Bottom, the lowest support level is going to be around 752. I don't see any pattern here. Maybe like a invert or a head and shoulders, like left shoulder, head, right shoulder, come down to the neckline. But I'm not seeing... Yeah, so I'm not really seeing any patterns. Let's go ahead and run my calculation here to see what we get. So their market cap is not over $1 billion, so we're not going to include that into our calculation. So they make 772,810,000, but they're losing 128,440,000. All right. And we're going to go down to the balance sheet. They have quite a bit of cash. Is this USD? Yes, it is. 205 million. That's a lot. Plus 205,840,000. Total assets is 1.2 billion. That's beautiful. Total liabilities 553 million. So assets dwarf liabilities about 2.3 to 1, which is fantastic. Long-term debt. So they do have debt of minus 442,220,000. All right. Cash is slowly going down. Assets are slowly going up. Liabilities are very slowly going up as well. Debt is increasing a lot. Let's see what they're... I'm looking... It looks like they're slowly getting to profitability. Let's see what they're guiding for 2024. February. Okay, so record network volume of 2.4 billion. Okay, so they broke a lot of records. Record fourth quarter results. Yes, yes, yes. Okay. Okay, 2024, here we go. Full year 2024 outlook. Expected between 9 and 10 billion. So this is what we want, total revenue. Okay, so they could be breaking $1 billion this year. Okay. So they had a profitable fourth quarter. Am I reading that right? No. So a lot of numbers here. Okay, that's good. This network volume, it doesn't really mean much to us. I mean, it means something, volume, but we want the revenues. So expected revenue between 925 and 1 billion. That's good. So they're getting closer to profitability. They could be profitable this year. So that's pretty big. Back to our calculations. So we have this, which is our sales income plus cash minus debt. And we're going to divide this by 20. Well, we're going to do two calculations here. So this is our conservative price target. So at $8.26 is our low number. Our high number is going to be plus 0. Okay. So we're going to take this divided by 27,700,000. Between $8 and $14, and the stock is now trading at 10. Why they did a reverse stock split and then an offering beats me. But what I want to see is I want to see some insider buying now. If that truly is the end of their shenanigans, they will start buying. I don't see any insiders buying. So I'm going to wait. I'm hesitant. Let's see what institutions are doing for PGY. So institutions own 14.5% as of old data. New data suggests 264%. I don't know if that's correct. We're going to see 264%. Is that... Oh, I don't think that's accounting for... I think that we had the reverse split, but this website, Fintel, does not recognize that. So the 186 million shares, it was a what, 1 to 12 split? Yeah. So 186, let's do 186 million. So now it's only 15 million. So 15.5 million shares out of, out of the 49 million. So divided by 49, 39. 31% institutional ownership from 14. So that's a 17% increase. Let's see if we have data to back that up. Okay. Whoops. All right. This is all pre-split numbers, so we'll break this down. So they decreased heavily, barely increased, decreased, increased. You notice there's no BlackRock or Vanguard. I wonder if they're smelling what I'm smelling, which is the shenanigans. Are they over yet? Question mark. Our institution or our insiders going to buy yet? I think that's what we're waiting for. Again, $8.80 was the low end price target here. Where'd it go? $8.26. Support is at $8 or $7.52. So I would wait for this one. I want to see insiders be committed. I want to see this consolidate a little bit more. We had a huge sell-off. Let's just see this consolidate more. Are the shenanigans over? To be determined. But I would sit on the sidelines for this one. If you guys made it this far, consider subscribing. Again, 8.52 is our waiting area. Could go further. Just patience on this one. If it does shoot up tomorrow, I do see 15. $14 is where the gap is. And then we do have resistance around 15. So thanks so much for watching. Take care.